welcome. Thanks for joining us this week for Market Review at Maxi. I'm Max and I'm joined with Sid today. And let's dive straight in as we always do. Today we're going to look at the DXY, which is the US Dollar Strength Index. It's going to show us how the US dollar is performing. And we want to look into this, especially like right now, because the US dollar tends to move in inverse with the equity markets, meaning that when the US dollar climbs, stocks, cryptos tend to sell off as money moves from those markets into cash. And then as the US dollar, or as the DXY rather, falls, people are spending their money and buying into equities that have a higher upside in that kind of market condition. So in the past few days here, you can see what the daily chart pulled up here. So it has it pulled up here on the left.
Yeah, on the left side.
And you can see we've kind of flipped the trend here on the daily chart and gotten our bear print. We've been moving down a little bit, which is in line with, in the same time frame we were having, the markets are kind of moving up, recovering nicely. And so you can see we are kind of continuing that trend down, which is very in line with our projection for the stock market and equity markets that we're probably heading to higher highs in 2024. As long as the DXY keeps, selling off like this, we're definitely on path or on target for that. And you can see, it's pretty solidly in that trend. It's not overbought or oversold yet. It has room to move down. The SRSI is still the momentum is still on the way down. So,
the week just closed though. So usually what happens is it does a little retest. It swings the other way before continuing down, and that's probably what's going to happen, because if you look at this daily candle, that's a bullish kicker. I think that's what it's called, But so this sets it up to do a little retest, maybe around here, the 103 region, and then it probably continues dropping. So when it does a retest, what's going to happen is that the stock market is going to pull back a little bit, which goes in line because with the bullish close that we had with stocks this week. Yeah. So if you close bullish, you might pull back a little bit at the start of next week, maybe basically do an SR flip where you pull back. So stocks are probably going to pull back, bounce on support, doing an SR flip, while the DXY does a retest pump and then topping out at resistance and then continuing to fall back down.
Yeah, and
that's what we're guessing.
That's what I'm thinking too. And I think a lot of that is basically what we're saying is that we've observed that when a candle, like a weekly candle, closes, the following week starting usually will move in an opposite direction. So like Sid was saying, the stock market weekly candle closed bullish. So we're expecting a little bit of a bearish price activity before the next week's candle starts to turn bullish as well and continue the uptrend. So I would imagine early next week, probably continue to see a little bit of red in the market. Maybe this weekend is going to have a couple shenanigans. That's usually a crypto thing. But I think moving forward into the next week, we'll probably see a little bit, like we're talking about, a little bit of a red at the front of the week and then shifting green and continuing the kind of upward movement we've seen in the stocks for the second half and into the end of the week. So expecting to close the week probably bullish, potentially start a little
in
bearish.
The green. And like you said, we're probably going to see new highs in the stock market next year. Yeah. I mean, I know we were tracking the cup and handle pattern. We call it the cup of Joe, but so it's been playing out.
It's still in play. We're still on the way to the first target, to that target of the cup and handle. So we'll pop back in on that when it's actually a little bit more matured along its trajectory. But you can see on the right, I can see you already have Carvana pulled up there. So there has been
some squeezes,
some short squeeze action going on. We have Carvana, and we were talking about Carvana and GME last week already.
Yeah,
and so
I think the price was around 40 or something before it broke out of this. It was, and we traded this really. We've been trading this really well. Just on my spot bags, I think. Just with one day of trading, I 25% or something. Just stock back. But what made me enter was the fact that into the position was this so we had a bear, it topped out. This is a daily time frame on both.
Yeah.
And then you can see like here we had some like fake outs because the band didn't change to match the print. So, but here it went into bear, it kept going down. And here, this was weekly support that I had drawn out, and you can see it wicked at support, and then it bounced up. And then we got a bull signal. And then the moment it crossed the strength band, our indicator strength band, and it turned green to confirm it, that's when I went, I'd started scaling in around here when I saw the print. But then I added once we flipped the band too, and then see it's just been going up, and so we had talked about this. We'd guessed it would go up because the weekly had also closed bullish, and see you can see that a clean SR flip. See, this was weekly support, and we shared this a while ago, and see now we have like actually this could also. It could be a potential cup and handle.
If it now does a little pull back and then move back up,
Exactly. Or there's another pattern where if you have a small U like this, and then a bigger U, I think it's called the Adam and Eve pattern, which is also very bullish. It's basically a small U and then immediately a larger U. And then once that breaks out of the last high, then the target is going to be the length of this, similar to a cup and handle.
Okay.
It looks kind of inverted, but like.
And that target looks to be almost. Let's see, it's like going from like 25 to 50, so it's almost 100%.
Price so if we measure it, this is approximate, but let's see how much it goes. And if it lines up, there it lines up with like around 75. So from here. So it's another like
50%
close to 50%, 47, 50%. But like, with that's potentially what we could see. And
that hits you right to your top, right to the top of your resistance there.
I didn't mark lines beyond that, but that'll be interesting to see if we actually get this. We'll check back into that. But you can see on the bullish time frame, it's been bull. Ever since like around like whatever $18-19. But see, this is after it being bear all the way in 2022, and then now we have on the weekly actually this looks like a cup and handle.
Right. Look at that.
See there, and then it's
this
like
is like
breaking out.
So that you'd have to measure.
So many cup and handles. So if it's like
that would be
there,
quite the breakout.
And 102 actually that goes to like this weekly.
Weird how that works out.
Isn't that funny?
Knock that one on there too.
So that's interesting.
We'll have to keep an eye on that one. That's definitely we're playing that right now, so it's good. It's exciting to see
these. We had good profit, but for the early week, like we probably have a temporary pullback, maybe around 46, and then SR flip this and then continue higher.
Should give us an opportunity to open a position in this play here, kind of at a decent entry price early next week. Especially since we sold already for 25% profit. Now you can buy it back, ride the rest,
and just keep writing it again.
I'm
already GameStop.
I'm still riding my GameStop. I'm doing pretty well there as well.
Exactly. We shared. I think the last time when we looked at it, we were on this candle when we got the bull signal. And then actually, I just realized something that's like. Looks like a pennant. Interesting. So like, it broke out. So like it could retest this, maybe here 17 or 16. But as long as our indicator is bull and green, then we know it's going to continue higher.
The confidence is building.
And then, exactly. So like if the stock market anyway is going to do well, which we think it will in the coming weeks, these squeezes are probably also going to do well.
So let's keep those on our radar for sure in the coming week.
Stock,
And then And then we had another kind of incident, I guess. Incident is a good way to
Crypto.
put it this week in crypto. It's never a dull moment if you're paying attention to the crypto markets. There's always some kind of mass fraud or some kind of collapsing centralized
Rug pull or
exchange or
something.
rug pull, yeah.
Or a
So,
hack.
or a hack or an exploit. So this week, everybody's favorite hardware wallet manufacturer, Ledger, was a little bit in the hot seat. Ledger HQ, they create a piece of software called Ledger Connect that a lot of
There we go.
third-party applications use to sign into wallets. And this Ledger Connect is basically querying a CDN, and the CDN will then put the JavaScript to the DApp that lets you connect your wallet. And that was compromised. And so when people were trying to connect their wallet to their applications, not just their Ledger wallet, any wallet, so it could have been your MetaMask wallet, your Coinbase wallet,
Mm.
whatever web extension wallet you're using, if you were interfacing with an application on the internet or over the internet that was using this, Ledger HQ Connect kit, which was at the moment compromised, then the JavaScript that it called on to open and connect your wallet to the site would have actually pulled up a malicious contract transaction. And if you had signed that transaction, it would have given the attacker permission to drain the assets out of your wallet. So a few
Mm.
people got hit with this wallet drain exploit. And it turns out, from what we're reading in these articles and the postmortem of this, it turns out that I think the exploit happened from a phishing attack that was targeting a former employee who still had
Mhm.
access to these CDN. Uh, I guess I don't know why, but I guess they did.
Yeah, I mean, he shouldn't have. Once you leave the job, it should have been security protocol to
Yeah,
like revoke all the access. Ledger should have done
yeah.
that.
On
The
the plus
company.
side, the crypto space caught on pretty quickly to what was happening. They let everybody know. There was a lot of like communal effort to be like, hey, don't interact with these contracts right now. Don't sign into stuff. And
And we let our members know too. Like
yeah, of
I
course.
remember waking up first thing in the morning. I saw. I mean, it wasn't news wasn't being pushed out. Like it wasn't. People were still
Yeah,
trying to figure this out, what's going on or whatever. But we did see, being in the crypto space, we saw this. We heard whisperings of this happening,
yeah.
and
And let people
we
know
alerted our
immediately.
members, and luckily, like we were all
Because
safe.
yeah, especially at first when it was first happening, people were saying there was like an issue with using your ledger, and so we were very quick to be like, hey, this is an issue. It's not about your ledger. It's about so I guess the plus points here for people, so you're not too panicky if you have a ledger, for example, or you keep your crypto on there. The ledger itself was never compromised.
Mhm.
As part of this, the Ledger software, so the Ledger Live application was not part of the compromise, and the actual JavaScript distributing CDN that was compromised was rectified about 40 minutes or so after it was compromised. But the good practice that we were preaching to our members, and that is just generally anybody should follow, is not to interact with any decentralized application for 24 hours afterwards, giving those applications a chance to upgrade to the latest version of the Connect kit so that they're not still pushing out malicious JavaScript.
Right, right.
So it was a little bit of a technical like hack here, but we're always kind of keeping an eye on these markets and making sure our
Yeah.
members can remain safe while also being in self custody of their assets. The market has been looking pretty bullish, but just like we were looking at it last week we were saying, hey, it's been bullish, but it looks like it's hitting the wall a little bit, running out of steam. And you can see this past week, the candle has in fact started to pull back a little. That is what we were
Yeah, this
expecting to
is
see.
this is the daily. It like topped out here. This is Ethereum on the left side, Bitcoin on the right side. And we were looking at, like you said, it's on the weekly because we were at like resistance. We had kind of tapped resistance. We were in a huge resistance block.
Mm-hmm.
And the fact that the stock RSI was kind
Over
of flatlined, and it was kind
flatlined
of
and
like
overbought. Yeah,
overbought, so it had to cool off.
yeah,
And yeah, so like both these things made us think that it's going to pull back, and that's exactly what happened. And now we're trying to actually hold at our indicators strength band. So you can
yeah.
see here how like here the strength band is kind of acting as support. So you can see it's like it's wicked up, but you see like this is a daily chart. So we did get rejected at resistance both for Bitcoin and Ethereum. And we're looking at Bitcoin and Ethereum because they're kind of like the blue chips.
Yeah, the true north
Bitcoin
of the
is
whole
kind of
market.
like the S&P 500 of crypto. Like everything is going to follow it,
Exactly.
So
yeah, if Bitcoin has a great day, then like the market is having a good day as far as crypto. Yeah.
And so, but but yeah, we'll have to see if it actually loses its strength band. If it does, then a deeper the pullback is gonna accelerate. And so that's on the daily. So on the weekly, Ethereum is trying to hold on this pennant that we shared a long time ago.
It's basically only deviated above it so far. Let's see if it can actually break above it. I feel like we need to confirm now that it's going to hold.
So like if it's like this and then it goes, if it does this thing where it drops below and then gets rejected, then it's going to fall back here.
Yeah. Test the bottom.
Where like all the way back to the bottom, or it could try to hold at our strength band.
That's true.
Basically, which could still be just taking that out just so that you can see better. But if it deviates and if it falls below, and if it holds on the strength band, that's still considered bullish.
Yeah, exactly. So we can get a pretty substantial pullback in those markets and not actually leave our bullish sentiment behind.
Yeah, see, like to the strength band, that's already like more than 20% from where it is.
Yeah.
So the total drop would have been around 25%, which is expected in crypto.
Yeah, exactly.
Usually a deep pullback is 20 to 30%. And it used to be closer to 30% like a few cycles ago, or like, but as any asset matures, the volatility of it also reduces, which is what we're seeing now too. So like instead of getting, and also like, like 5 years ago, for example, we would see a 20% drop in one candle.
Yeah.
And now, which would scare the pants out of everyone. But I mean, we're used to it because we were in the space back then. So
yeah, it's also
a 20% drop for us is like nothing because you get.
I also feel like there have been a decent amount of there's been a new blood in the chats out there again, and new blood in like the crypto communities talking about, people kind of who had dipped their toes maybe at the peak of the bull market and like kind of got burned a little bit. And now we're seeing this positive price action and are coming out of the woodwork again to kind of be like, oh, is it, time to come out for the summer again?
I have friends like reaching out.
I'm seeing quite a little bit of that. And I think that is also a very I hate to say it like that, but it's kind of indicative of like, pullback is kind of in the stars here. Like those people are going to get shaken down a little. Yeah,
the market like cool, humbles people.
yeah. So it's good, like Sid was saying, 20, 25, sometimes even 30%. Like if you aren't expecting to sit through that type of a pullback, then maybe reconsider the market you're trading in, because this is a very volatile market.
Very volatile, but yeah. So if it deviates back below the wedge or the pennant, and if it bounces on the strength band, that's still bullish.
Yeah.
Or it could still drop to the base of the pennant.
Yeah, find support there and keep moving up. That's still bullish. Yeah.
Yeah, like interestingly, like the strength band for our indicator strength band for Bitcoin lines up exactly the base of the pennant. So like it can do that and then still bounce. But if it deviates back below, the point is if it deviates back below, then expect a deeper pullback.
Yeah.
And then we would probably short it all the way towards the base of the pennant, and then maybe wait to see if it loses it, which would probably scare some people. Lose it, or we bounce back up to the top of it.
Yeah, and if we are going to get like the classic crypto scenario moving into the next bull market, then that is kind of the game plan here, is to pull back almost to the bottom of that pennant, have a deviation below it to shake out the last of the naysayers, kind
Yeah,
of, and then from there move up into the bull market cycle entirely.
yeah.
That would
That
be,
could also, that's a good point,
generally
because like,
speaking, that's the game plan for crypto. Like that's how it
yeah,
usually goes.
because if it deviates back below this, then people are going to be like, oh, okay, like it's because
Yeah.
that would really screw people, because like we've deviated above
Yep.
and like taken out the people who are watching the pennant, so we deviated above, and then if we deviate back below and go back up, that's like on both sides.
Yeah. That
Basically the people are screwed on both sides, which
feels
would,
appropriate. That seems like
yeah,
the kind of whale games that get played in these markets. The market makers
exactly,
have that kind of money, and the liquidity in these markets is still not crazy high. So if we're looking at, like, for example, the volume that's being moved
yeah.
around compared to like what it used to be during the similar
See,
price times, much lower volume. So this is
and also we still haven't got
the bull print.
the bull signal. I mean, we did briefly get it, but it didn't stick.
Yeah, that's why we
We
gotta
saw
wait.
it pop recently, but we still have 15 days left for the candle to close, and that's how the indicator,
Yeah,
how it works is that it's non-repaint or anything. So the candle, once the candle closes and the conditions are met, then it will stick.
yeah,
And once we get a bull signal on the monthly, then it's going to be by the dip mode. You know what
yeah.
I mean?
Then
If I
it's
change it to a longer time frame, you can see uh,
yeah,
how even you can have drops. You get a bull signal, you can have the price drop, but then if you just kept buying the dip,
yeah.
it would still be
Yeah,
bullish.
and even that, the bottom of that dip that you're outlining there, that's like the bottom of the COVID sell-off. Like
Oh
that's
yeah,
an
this is a
aggressive,
COVID sell-off
that's an
candle.
aggressive dip.
That
Like,
was this. I remember this because like
yeah,
this was a classic. Like in one candle,
yeah,
it just
that
like
was old school.
this. You know,
It brought back the nostalgia.
55%. It
Yeah,
just like tanked. Then
just
this happened on a night. I was remember it was scary,
yeah, that
and
violated people's portfolios.
yeah,
Yeah,
and but the indicator still stayed bullish
yeah,
because it got wick back up, and then the next candle we closed back up above the strength band. And so if you even if you bought here and if you just held through, uh, you would have had it. You would have basically been ready for the
yeah.
oncoming bull market.
Exactly. Held through like a 20 to 40% loss from the top of that first signal, but then held through that into a like 300% profit.
Exactly, like you would have just bought here because you just buy the dip mode.
Yeah.
I know it's going to be scary, but then
Yeah.
you just trust it and
Exactly. That's why we
you
want to
buy
have.
it.
That's
Yeah,
why we're waiting again. Like, so that's why this week a lot of what we're saying is like, oh, we need to see this close here or here. It could go this way or that way. So like, this is
yeah,
kind of an important week to like find out how we are going to progress forward, so that we can have our conviction, so that we don't, open positions that we're not sure about and then close them as soon as they like go south in like an amount. Like we want
yeah,
to be able to open a position, and if it goes south, have our conviction there that is like, okay, we don't need to like sell at a loss here. We can wait this out because we have our conviction. We've done our due diligence here.
exactly. Till then, we're just scalping, so which is what we've been doing great. So, like
Yeah,
for example, when we saw the Bitcoin bull signal here on the weekly, this is where you buy spot or long-term investing, and then
yeah,
see you still at massive profits. You basically doubled your money if you bought here.
yeah,
And then nothing goes up or down a straight line, so we still scalp the smaller sort of like
yeah, exactly.
day trader scalp the smaller moves, because you can switch it to a daily time frame, and then you go down to the 4 hours, whatever. But
Mm-hmm.
for long term, you look at weekly and then monthly, and that's your long term plays. But for shorter term, you can also make use of any pullback, or volatility that you face.
Yeah,
So,
exactly. Yeah, so this week
so
we'll
we'll
be
see.
watching. We'll be
Uh,
watching. We're watching the crypto markets. We're
and
watching for the short squeezes, and then we're obviously watching the U.S. dollar and the major stock indexes to see kind of the picture develop and make sure that we are getting confirmation before we actually enter the positions we want to open. So trying to not front run our own strategies here, and stay disciplined, watch the charts. So that's part of the struggle here when it comes to like doing this correctly. But yeah, hopefully you guys can join in on some of these moves, pay attention to these markets, get a better sense of how to read the charts and how to like spot these kinds of patterns. And as always, if you want to join the conversation over at Maxsi.io, join up. Membership is free for the first month, and you can join our Discord. We're talking about this stuff not just once a week like we do in our videos, but like all day, every day, just whatever we're currently trading, whatever kind of like opportunities we're coming across. Like there's a stock trade that I mentioned there recently, which was based on like due diligence and
Lumen.
for Lumen about a potential acquisition. So those are interesting kind of places to bounce these ideas around. We're talking about, I think, precious metals trading too. Like, if you're into buying gold, Costco's the place for you. Yeah. You wouldn't think so, but yeah, physical gold at Costco, what a deal. Spot price, and you get your cash back on your credit card. Do it. But yeah, so would love to see you there. And until next week or until our next video, keep your eye on these markets. We got to wait for our confirmation. Keep your discipline, and we'll see you next week. See you guys.